Okay, great. Thank you so much, everyone. Great to be here again. So, I have some very smart people who are going to be talking all about exchanges. So, I guess if we can have everybody talk a little bit about who you are and what your exchange is doing right now, where you fit in the industry. So, Lennox, do you want to go first?
Yeah, sure. My name is Nanik. I'm the financial market director in OKX. I'm been OKX for the very first day on OKX. I'm part of the really starting from scratch Scotia team. So my background, working for 10 years in traditional financial markets, specialized on trading and specialized on regulatory compliance on the equity market and commodities. So I kind of like endorse Bitcoin and love Bitcoin. So I recently shifted my career and building OKX. So right now, OKX has already been grown to one of the biggest crypto exchange world, covering a wide range of products from spot margin to all kind of derivatives and options. So we're very excited to be participate, to witness, to visualize the growth of the Bitcoin and crypto space, and we're really happy to contribute.
Okay, great. Kira, would you like to go next?
Hi, everyone. Glad to be here. My name is Sierra Sun. I'm the head of global business and markets at Huobi. Before joining Huobi, I spent most of my career in the traditional finance industry in New York City as a management consultant. I worked with BCG and Deloitte and EY, advising banking capital markets groups for major banks, hedge funds, and PE firms. And as for Huobi, we're one of the leading and trustworthy exchange in this space. We offer plenty of different products and features to crypto traders, from spot to futures to OTC, brokerage products and leverage, and so on and so forth. We serve tens of millions of users from 130 different countries. And again, very glad to be here on this panel with you guys.
Excellent. And Paulo. Okay, I guess he's not here. Okay, so it's just us. So okay, so I guess I'm interested in, there's just been so much turmoil so far in 2020. People keep joking that it's the whatever 100th day of March, and we had OPEC, we had issues between the U.S. and Iran, and then we had COVID-19 and oil going negative. So much stuff that's gone on with economies and markets. So what do you think that's meant for exchanges and for crypto overall? Kiara, would you like to go?
Sure. Well, I think, yeah, so starting from year 2020, there are a lot of things going on, but I still believe that we're in a very ideal environment. Cryptocurrency has been on the institutional radar for years, but the current market volatility and economic climate has created very ideal environment, I think, for right now opening up for institutional traders come in, which is a very important factor for our industry to really grow and scale. It's a very perfect storm right now. There is volatility and there is uncertainty in the traditional financial markets. And central banks around the world are printing record level of new currencies, and inflation is looming. And also in this year, Bitcoin just had its started halving. So I think there are really two reasons going on with it. With everything that's going on, say there are reasons we see institutional traders enter the market. First is that investors are looking for ways to hedge monetary policy risks like quantitative easing, while Bitcoin isn't the same kind of safe, have an asset like gold, but its decentralized nature make it, not impacted by policies or actions of any just one single government. So I think that's one reason that's driving institutions come into play. And second reason is just that traders are always looking for returns in a volatile market, and it has been a very good asset, since its first day. It's only 10 years, and it's been this big and adopted by massive number of users. It's a good asset for traders to hedge risks, and also I think we are seeing a rise in derivatives market. Maybe I think Lennox can relate to this quite a bit as well. So institutional investors are very active in the spot market, but we are seeing so much growth in just derivatives market as well. If we look at data, we've seen trading volume on derivatives market increase by about 85% in the last few months, as you just mentioned before. What happened was March 12th, the major collapse of the Bitcoin price. And also, if we compare with Q4 last year and Q1 this year, derivatives market trading volume increased by, again, another 80%. So there's very strong figures. So I think those are the trends that I'm seeing right now in current state of the industry.
Okay, Lennox?
Yeah, I agree with Sierra that so actually there's so much going on in this particular interesting year. A lot of turmoil that trigger different kind of market deviation in the market. As a matter of fact, the volatility in traditional equity markets, including commodities market, is actually bigger than Bitcoin right now. So, for example, oil crashed to negative, and Bitcoin still really strong, and still never hit to negative. I think the recent uncertainty in this year particularly is actually give a big push, a big promotion on crypto Bitcoin. So right now, at least on real traditional side, I'm not talking about crypto native traders. I'm talking about pension fund or hedge fund, or even really traditional investor on financial area. They would kind of like asking a question that if the balance sheets of any kind of central bank that hit 600% of GDP, would that be a sustainable situation? If that is not sustainable, would Bitcoin, which is kind of like fundamentally very different than the other asset class, would be a great and viable alternative asset class if you compare with the global macro. And Bitcoin, as a matter of fact, is already proven to be somehow a crusade, say heaven of global macro. It's not 100% correlated, 100% negative correlated right now, but at least we know that provides some kind of buffer or correlation benefits if you compare with global macro. So it's already, these kind of unique features already arouse interest for many traditional bankers, institutional traders, and even the government and the regulators. So that is a big push, a big marketing push for crypto space. And we are happen to be, me and Occasion will be happen to be a really right position to within the crypto space.
Okay, interesting. So what's a lesson that you could take from, say, your operations, your business strategy over the past few years, anything that's happening currently that you think is really a lesson for the entire space, or really applicable, you think could kind of be a lesson for the industry? Kira?
You mean the crypto industry or the macroeconomic?
Sorry, I would say crypto industry and exchanges.
Yeah, we are very long. I think me and OKX and Huobi happen to be really having a really long history in building the exchange. We're actually starting similar time. We actually benefit by the boom of Bitcoin and crypto. I think the lesson learned for the industry. I mean, the crypto as a whole is based on our experience. We are don't ever give up and develop committing onto your product. So eventually, the customer or even the crypto industry as a whole will endorse whoever a company will be having a really strong dedication to improve and to polish their own products. That's the undeniable fact that the product come first, then all the marketing kick and purely promotion adoption. If you have a great product, you keep improving your product, your customer and user will come eventually. So right now, I think the crypto industry will be a little bit questioning or self-question about themselves whether the industry will be kind of stuck there for a while and have difficulties in growing their user acquisition. But we gonna need to have a belief on Bitcoin that is going to be a human project that's going to benefit the whole world, and crypto do become a very important asset class globally and gradually endorsed by the global recognized government. So it takes time. The industry or new technology takes time to grow, and all the startup or all the participants just need to be patient and dedication to their own very edge of product and values offering, values propositions.
Okay, Kira.
Yeah, like Lennox just said, we've been kind of ancient in the industry. We're having our 7th birthday coming up in September, and in the past 7 years, we've seen a lot of up and downs. One very special moment that everybody remembered was September 4th, 2017. That's when the Chinese government said it's not okay to operate exchanges, and so that forced both OKX and Huobi to move abroad. And that's when we realized compliance regulations are always first priority for operating exchanges. As well as, when we're seeing more traders and especially institutional investors coming into play, they're really just getting more serious about compliance and regulations. So both in the assets they trade in and also the platform which they trade on. So part of this reasons is driven by traditional institutions and more, just requirement for what they trade, and also it's just very important for exchanges like us to comply and also to work with regulators and educate them to come with a very straight and clear rules with how to really regulate those markets. And so that's, compliance has become a very essential part of our business model since then. And we are now operate with full necessary licenses and regulatory approvals in every market that we serve. For example, our native exchange token, HT, has recently approved by the Japanese Financial Services Agency as one of the first major exchange token to be traded in Japan, where it's listed on Huobi Japan right now, where we hold the exchange license in Japan, and we're trying to apply for, every single license that we can in the countries we operate in. I think that's very important for customers to feel safe and trust exchanges that they know that platform like us, with billions of assets deposited on and serving customers with millions of numbers around the world, are putting the most efforts we can with complying with exchange with regulations. And second thing I think is systems stability is very, very important, especially during the crash time like March 12th, where you see those extreme and unreal volatility and massive trading volume happening. It's very important to have a strong system that's never gonna go down for your customers to trade in. And especially with derivatives market, risk control are very important to ensure traders are able to trade within the safe environment. We're taking all measures to maintain strong risk control and platform stability. For example, like I said, the recent market collapse. Huobi futures systematically minimize users' exposure to risks during those severe market volatility, and we have guaranteed no clawback since day one. So I think, during those 7 years of up and downs, those two things would be lessons learned the most that we want to share with you today.
Yeah,
Okay.
I would like to add one more that last year that remind me that when we got the news from the Chinese government, it's like it's a devastating moment for any startup. So imagine you're building a company for several years, you have to quit completely in one night, in one single night. But you can see both our companies survive and prosper after 2 or 3 years with building or with learning. So as long as you keep the thing and you keep you keep committing that and believing what you're building and your journey, you will do the same job. So a final word for the crypto industry: those that don't give up, just keep building.
Nice. That makes sense. So just going on the theme of regulation, do you think the industry is making progress overall? Do you think governments are really taking it seriously at this point? Do you think there's anything that could change about the overall approach of the industry to regulation, or is it kind of heading in the right direction?
Yeah, that's a very good question. So the regulation varies in different jurisdictions. So I think some of the countries already have a pretty good framework or pretty good definition. What we need right now, I think, from the very bottom, we need a precise definition of what is Bitcoin and what is crypto first, because when you have a precise definition, then you know the category of your underlying definition moving forward to different category of jurisdiction or different regulatory framework. For example, if you define Bitcoin as a security, okay, go to security 4. If you define Bitcoin as a commodity, okay, regulate the commodity bureau. So some of the countries already did a really good job in drafting at least an initial framework for definition of crypto asset, and also the participant that's allowed to engage dealing with, for example, like Japan, for example, like even the US, for example, like Singapore. So they, or for example, in Malta. So they do have a complete framework in terms of regulating virtual assets. So what I think is, you cannot. It's very difficult for a government for regulators to put a Bitcoin or crypto asset into your existing framework. You cannot put crypto into your existing security framework or commodities framework so easily. It's easier for a government to set up a separated regulated framework or virtual asset framework just for these kind of participant. We see some of the promising trend in India. We see some of the promising discussion in FCA or even in Russia. So I think I won't say it's heading to I think it's heading to a positive direction. At least we have already aroused interest for various government endorse Bitcoin, the crypto assets will be existed for a very long time. It's becoming an interest for a public interest. So they would, it's worth for them to spare their time to draft a complete robust regulatory framework just for crypto assets. So I think it's really heading to a positive direction. Maybe some of the jurisdiction will impose a really, really harsh requirement, but even so, I think it's heading to the right direction.
Okay. And Kara, you have thoughts?
Sure, yeah. So digital assets are just becoming more prominent in every market. So regulators are now stepping up their efforts, classifying and regulating digital assets in a more formal environment. And investors know that compliance is critical for long-term sustainability for the industry overall. And nowadays, like I just mentioned, bigger businesses and exchanges are calling for more regulations, clear regulation framework, so that we know the boundaries where the space can operate are clear and outlined. And we've been putting in a lot of efforts, like applying for licensing in Japan was a really hard one, and licensing in Thailand, and also other jurisdictions that's still in process. I think just there is a lot that crypto and blockchain can do. It holds a lot of potential, but some of this potential can step on the toes of regulators, even unintentionally. So it's better to know where the limits are in regards to the regulations.
Right. Wise words. So one thing that has cropped up as an issue over time is security concerns. Do you think there are any particularly strong lessons, or where do you think we're headed, and what's some advice that you would give on the issue of security? Kira, do you want to start that?
Security in terms of secure token? Just
in terms of the exchanges and just assets, and making sure that things are trading well, that you don't have problems of losing what you put in, that sort of thing.
Yeah. So like I mentioned earlier, we hold lots of assets. We hold almost 5% of total crypto on Huobi as deposited from our customers. Customers, they trust us and they put our assets on our exchange. So it's our duty to guard them, their assets. So security has been our very, very important strategy over the past 7 years, and we're very happy to say that we've never have a major system outage where thousands of bitcoins are just lost, and that's not going to be a sustainable business model for anyone. It doesn't even matter how well you're doing right now in this space. One thing like that happens, you'll never get your trust back from your customers. So at Huobi, we have a very, very strong security team. Our chief security officer used to be the chief security officer for Didi, that's a Chinese Uber. So they have a very strong professionalism, and also just the way they structure the team. And he currently manages more than 200 employees at Huobi, out of 1,500 in total around the world. And like I said earlier, we put in the most efforts we can on building a secure and strong system for our customers to trade on.
Nice. Lennox?
Yeah, I'd like to clarify some of the misconceptions on the security aspect on crypto. So, in general public might think holding crypto is not safe because of all those hacking news or incidents that's over the past many years. Kind of like a really bad experience for crypto traders. So I think that this industry already developed for quite a number of years already, and most of the top-notch exchanges has already employed the top level of securities or cybersecurity expert or even the white hackers to challenge our own system. So that's why they can able to sufficiently to confidently to protect customer access safely and sound. Most of the hacking right now currently happen within the crypto ecosystem, mostly related to on a user level, or maybe some other level will be protocol level. User level means some of the user got hacked in terms of their password, or they forget to turn on their 2FA authentications, or they having a really low threshold in terms of setting up their password securities. Another area, risk area, might be some of the defined protocol recently got hacked because it's an open protocol. So custody, your crypto assets in a major exchange right now can be considered as safe relatively in relative terms, and that's why some of the biggest institutional traders already being a lot more comfortable to custody the assets. I think they're having to they already evaluate robustly that how crypto exchange would manage their own assets. Imagine we have been dealing with millions of customers and millions of transactions and trillions of crypto assets on a daily basis. Of course, we have lots more experience. Otherwise, we're out of business in no time.
Okay. So let's go to, since this is lessons learned, what's a big kind of pie in the sky thing that you think exchanges could really use, something just going forward that you think would be a really great thing for exchanges in general for crypto? We're talking to two of the people who really know this space. Like, what's something that would just be great for the industry going forward the next, say, 5 years? Lennox, do you want to start?
Yeah, I think I would be particularly excited if Currency-Fi, which is centralized exchange model, will be gradually and partially moved several components into blockchain protocol. So right now we do have DeFi, which is decentralized finance. It's a concept, but the user base right now is really limited compared with centralized exchange. Because centralized setup is a lot more efficient, there's a lot more convenience, it's a lot more robust and scalable because of the experience and server rack or different decentralized server rack. But the world or the crypto space should be moving to a lot more decentralized or multi-centralized. So exchange might very difficult for them to put entirely all the matching engine or the book directly onto the defined protocol, because maybe the technology is not ready, maybe the security level is not ready, maybe the scalability or different kind of blockchain protocol is not ready too. But at least we can put something, starting to put something onto blockchain components. For example, the transaction history. For example, the off-chain settlement. So the crypto assets should be multi-sig co-managed by user and the exchange together. And also we can put our insurance pool onto blockchain. There's several ideas that can gradually hoping to transfer our exchange component into a decentralized manner. So that would actually benefit to this kind of experience would be very, very beneficial to the development of different kind of blockchain.
Okay, nice, thank you. Kira, your thoughts?
Yeah, so I think I really believe that within the next 5 years, more than maybe 85% or 90% of total institutions will have some exposure to digital assets in their portfolio. And as a result of institutional need and for regulatory compliance, I think many smaller exchanges that do not meet regulatory requirements or doesn't have a very strong system that can hold those assets and trading volume will either shut down or get consolidated. So we are at a very critical time in the evaluation of the total cryptocurrency ecosystem. It is still a very new ecosystem, by the way, really only taking root in the last 5 or 7 years or so. So there are still many early adopters who are happy to take a bit more risk, but 5 years in, same excuses just never going to work again. So I think people who were adopters are now looking for a space to mature, become more robust and polished. And this space is very fast moving and it's very demanding. So it demands products to be more innovative and more efficient overall.
Okay, nice. Thanks. So Chris, do you have any questions from the audience? Are you seeing any? Or should we?
You caught me off guard.
More.
I was eating.
Sorry.
No problem whatsoever. Fantastic. I've been listening while I was eating, and an awesome chat. I'm very familiar with both Huobi and OKX, and have been for quite some time. I've actually hosted a Huobi summit here in Amsterdam a year and a half, 2 years ago. So that was fun. I will go back. Let me just check if there's questions from the audience right now. So a theme that has been going on for the last few hours in BlockDown today is talking about stablecoins. When we talk about stablecoin, people are really interested. Which ones are the safest, in your opinions, to be storing or holding? Which ones would be the safest and the most recommended by first Huobi and then OKX?
Yeah. Well, Huobi first.
Okay, so we're not allowed to really give any investment advice or suggestion, so I can't really back any stablecoin. But I do believe that, as I mentioned earlier, regulatory and compliance are coming into play. So whatever token out there, either is stablecoin or just utility token, security token, who just doesn't really meet any regulatory requirements, or at least not the company itself is not putting in any efforts for applying for any license or to be regulated in jurisdictions they operate in or taking customers from, I don't think that stablecoin is going to last.
Difficult questions, but my take on stablecoin, at least the holder of stablecoin need to consider several risks. If you talk about safety, the very first one is to whether the regulatory framework is sound for you to 100% that the values of the token be 100% backed by fiat or any kind of fiat currency. So you need to review that how the trustee structure is formulated behind the token itself. So another risk that you might expose by holding a stablecoin would be the risk of redemption and creation. So normally, current stablecoin would allow, with claims to be allowed pretty redemption and creation, so that you can create your token with US dollar or any fiat currency and redeem your token back to US dollar or any other currency at any time you want, at any amount you want. But as a matter of fact, it might not be the case when there's a large amount of withdrawal or there's a large amount of creation redemption. That really depends on the standard of different teams. So there's several different risks that you need to be considered as a safety. So my personal opinion is to diversification of different USD-backed stablecoin. So you don't need to be, because everyone in every state wants to be in theory 100% backed by the same amount of USD value. You just need to take into consideration of risk on creation and redemption at the time, the duration it takes or the creation and redemption. So diversification is one of the key facts that you can play in.
Thank you very much for those answers. We have one more question here from our audience. They're asking, is there ever, and I guess we can talk about OKX and Huobi, but maybe you guys know on a broader level, is there collaborations, like public collaborations between exchanges, you know, and some kind of partnerships that happen there? Or are your companies completely, obviously they're privately held companies, but do you guys collaborate on initiatives from time to time?
Yeah, we collaborate on the dinner table all the time and drinking table all the time. So at least, right? But we despite the fact that we look alike and we in many areas we did compete, but indirectly, we are helping each other to raise each other's standards. So we love to have Huobi to grow the industry for us together. And in many areas, especially and certain jurisdiction or compliance area, we really love to work with Huobi together to educate our regulators. That's how a top-notch exchange is operated, managed. How a top-notch exchange in the world to manage their own risk. How a top-notch exchange to be respectful and to protect our customer access.
Great answer. Great answer.
Yeah. So yeah, well, actually, Lennox and I are personally really good friends, and we've been at so many conferences around the world all the time, and we sure collaborate on dinner table and drinking all the time. And we always talk about, you know, where are the next exciting market in the world, and where should we go to, or, you know, even for projects, we share our views and our thoughts together all the time regarding DeFi, regarding projects, regarding products. It's happening all the time. But regarding public partnerships, I think with smaller exchanges, I know that some exchanges offer custodian business, like Coinbase. They do offer custodian solutions to some smaller exchanges. And I think like Lennox said, I do believe there will be ways that we can collaborate together in the future among exchanges. Maybe come up with you know, a good and universal valuation system for how to really put a fair valuation for projects to be listed, or just listing standards. Because, you know, in the past several years, we've seen the history of ICO and then IEO. A lot of the projects out there are just not working. And I think bigger exchanges where host the most liquidity and most customer, if we can sit down together and come up with a very fair and good way and standard for listing and for valuation for projects, that'd be great.
Agree. Collaboration start.
Absolutely.
Nice.
Steel sharpens steel. We have one more question. This question comes directly from me. I'm wondering about your European expansion. Do you guys plan on having offices here? I think there was some mention of Huobi having one in London. We're super crypto friendly here in Amsterdam, the Netherlands. Is there plans for expansion here and maybe offices that I can come visit and also have some drinks and dinner and talk crypto with you guys?
Yeah, well, we already have some people in office based in London. We already have drinking nights and poker nights, crypto poker nights in London and them too. So, in the longer run, I think we will be very aggressively to expand our London and European office. We're very actively to figure out the best regulatory strategies and corporate structure strategies that hopefully the entire structure to be able to passport our OKX service to the entire Europe, including UK. So we are particularly optimistic that our company growth and organized structure growth in European area. So you expect that we're going to see you guys very soon. Prepare your drinks.
So yeah, same for us. Like you just said, we do have an office in London where we serve some of our clients with our Gibraltar license, and we do blockchain consulting in London as well, serving covering clients from a bigger European market. And in January, we were in Davos in Switzerland and checking out the whole market there. It sounds really interesting, and we've seen great interest from institutions in Switzerland. And I have some colleagues from European as well, and European is definitely one of our big targets. And hopefully, we'll be able to getting more license and getting more offices open in the European market.
Sounds fantastic. We've run out of time, but that's not going to stop me from asking one more question from the audience. One question, and a very interesting one. Do you eventually see decentralized exchanges becoming sort of a backup for centralized exchanges?
Backup is every word. Yeah, maybe. Yeah, Sierra. Sorry.
Sure. Yeah. So that's the question that's been asked to us several times. Decentralized exchange may be a direction for the future. It just current state, I don't think the system is going to be strong enough to operate really for decentralized exchange. And it's always a debate of, like we just talked about security issues. Who's going to be responsible for customers' assets? So I think until we can find a good solution for those issues and for developing a strong enough system to really operate a decentralized exchange, is still not going to be in a very near future.
Guys, thank you. Oh, sorry. Go ahead, Lennox. Go ahead.
Just one layer. Just totally agree with Sierra. So, just one layer. That's DeFi is still a very early stage. Despite the concept is so sexy and so promising, you cannot deny the fact that DeFi and CeFi will be eventually coexist. That's a strong belief. Maybe some DeFi may be bigger or CeFi may be bigger, but they will be coexist in a very, very long period of time. And CeFi will be really focused on user experience and direct touch with the customers, and DeFi will be really, really focused on protocol layer and the scalability of this transaction and its safety on different kind of price oracle. So it will coexist. It will not be taken over. We will collaborate a little bit more. It's not a backup.